that's why Ghana is looking for more money. The Ghanaian government, according to sources, is in talks over a loan of about $3 billion from the International Monetary Fund, according to people familiar with the matter. The amount is double what the West African nation was considering a month ago as it tries to shore up its finances and win back access to global markets. The funding would be provided over 3 years, according to people familiar with the matter, asking not to be identified because the talks are still in progress and public announcements have not been made. Well, we do have a statement from an IMF spokesperson, which we'll get to in a moment. First, Fred Duvor, Managing Director of Apakan Securities. He joins us from Accra to discuss further. Fred, good afternoon to you. Thank you so much for joining us. So let's start with the S&P downgrade. Some are saying it's unnecessary because things are still in play, while others say it's appropriate. Well, what do you make of it?
What I can say is it was expected. Earlier on in the year, we remember both Fitch and Moody's moved to downgrade Government of Ghana debt, but S&P maintained its rating. Between February and now, we have experienced a further deterioration of the macro fiscal environment to the extent that the government has had to engage the IMF for support on its balance of payments. So it really was only a matter of time before S&P also downgraded Ghana debt.
Wow. What's the impact of the downgrade? Does it make borrowing more expensive at this point?
Well, I mean, we're at a point where I believe the market has already priced in the risk of the downgrade. We observed that in how calm the market has been since the announcement of the downgrade over the weekend. In February, when the other two rating agencies downgraded Ghana, there was a lot of activity in the market, and Ghana paper was trading at very steep discounts. This downgrade, however, hasn't generated that kind of a response or activity from the market because I believe the risk has already been priced in by investors at current levels.
All right, I do want us to take a look at the Ghana yield curve from your Apakan monthly market update for July. And I mean, look, it looks pretty high. The current indicative yields in yellow there, looking like the 20-year bond is crossing 30%. Well, what's the trajectory here? Do you see that rising because it's well above the yield curve for where it ended in 2021?
Definitely. I foresee that the yields will continue to rise, and there's still that upside potential in yields. The government has been literally locked out of the international capital market, where it used to borrow cheaper money to fund its operations. But because of that, it is relying heavily on local borrowing to refinance its debt and fund its budget. So with this increased demand by the government, coupled with deteriorating fiscals and liquidity constraints, the only way for the yield curve is up now. And I think a few weeks ago, the government issued a 3-year paper at 29.85%, and it's only going to keep going up.
Wow! I can imagine what that does to debt servicing costs for the country. Since we're talking debt, let's talk about the talks with the IMF. Sources claim $3 billion is now being sought as opposed to what was $1.5 billion about a month or two ago. If that turns out to be true, will that be sufficient?
Well, I mean, I don't know about sufficient. I'm sure if the IMF offered $10 billion, the government won't reject it.
Right.
But with that being said, the $3 billion is much better than the initial $1.5 billion that was being rumored. Ghana is experiencing serious balance of payment situation. We have foreign investors moving capital to safer markets as interest rates in those markets are improving significantly. The FX reserves of the country is also dwindling. It's dropped from 9.7 billion as of December last year. It's currently around 7.7 billion, which is about just 3.4 months import cover. And then there are also upcoming Eurobond maturity and coupon payments that the government has to make, with a big chunk of it in 2025. And without access to the international capital market, every cent is needed for the government to meet that obligation. So yes, 3 billion is much better than 1.5 billion under these circumstances, but we still have to wait and see what the final program outlay will be.
All right. Let's take a look at this quote from an IMF official in an email response to Bloomberg. Let's put it up here. What they said. It says, since negotiations for the Ghana program are starting now, it's too early to comment on the final form that the program will take. The extended credit facility for low-income countries is the fund's main tool for medium-term support for countries facing protracted balance of payment problems similar to Ghana's. The duration of such an arrangement is between 3 to 4 years and extendable to 5 years. Do you think Ghana can sort its financial issues out within this duration of anywhere from 3 to 5 years?
I won't say Ghana will be out of the woods in 3 to 5 years, to be honest. But with the IMF possibly coming in, I believe there will be a significant improvement in our macroeconomic situation within that period. We expect that there will be new revenue measures to be implemented, and more importantly, expenditure will be kept on a leash with IMF acting as a big brother. What is important, in my opinion, however, is that if the program is agreed upon, then Ghana will be heading into an election year in 2024 under the watch of IMF, as we did in 2016, and this should help curtail the excesses that we see with respect to election expenditure by government, which over the years, which keeps deteriorating the economic situation after the election is over.
I want us to take a look at the inflation trend again from your monthly market reports. I guess last time we spoke, you said month-on-month inflation was, decelerating. However, year-on-year inflation is still climbing, and we can see the CPI trend from your report there again year-on-year. Food inflation, non-food inflation. What's the outlook? Do you see this still climbing as it, dramatically shows in this chart?
Well, so the central bank, as we know, has hiked its policy rate by cumulative 4.5% this year in its March and May meetings. And what we are seeing now is the effects of that on the CPI levels since the May hike. There's been a gradual reduction in the CPI levels on a month-on-month basis. However, last year, Ghana was in a single-digit inflationary environment, so the base from last year was quite low, and that is why we still see that year-on-year inflation is extremely high, what appears to be pronounced. However, if the inflationary situation from the past 3 months continues, barring any shocks in global markets, then we should see that year-on-year inflation will start trending downwards in the fourth quarter of this year.
Okay, all right, that's optimistic. Let's wrap up with the Ghanaian Cedi. Also, again, another chart from your report. You can see, if we put that up there, you can see the difference. Yeah, so, right at the top there, as far as its trading pairs with the British pound and the euro and the dollar. Again, do you see continued weakening as far as the currency outlook is concerned?
Yes, the Cedi has been under a lot of pressure this year, I must say, and in the first quarter, it took a bit of beating. It, however, remained relatively stable in the second quarter, following aggressive market interventions by the central bank. But we can see that the central bank has run out of ammunition in its war chest to fight the decline of the Cedi against the dollar, because the reserves is fast depleting. So we have seen that in this third quarter, there's been a steep decline in this third quarter. However, very soon, we're expecting that a $750 million Afro-Exim loan will come through. It has been approved by Parliament, and also the annual $1.5 billion cocoa board syndicated loan by Ghana Cocoa Board to purchase cocoa beans from farmers for the next crop season would also be coming through. So in the next couple months, we expect the central bank to have replenished reserves, and that should aid it in supporting the Cedi. So I expect that the steep decline that we're experiencing now should kind of plateau in the next couple of months.
Great stuff. Fred Duvor, always a pleasure talking to you to give us the latest on Ghana. Managing Director at Apakan Securities. Thank you so much, sir, for your time. We appreciate it.